Morning Doctor and Meiji from Group 1. Actually, we are present about which the PN70 companies which the company that we select with the TXCD per heart. Actually, for the introduction, we will focus on the 5 key points that I want to present about. For the first one, which is the financial variety also for the PN70 platform. Actually, it's also we want to show the importance of the financial stability to expand the role of the PN70s like as the regulatory author for the decreased company. And the second one, which the case focus on the TXCD per heart. Actually, it also highlight the TSCC perhaps like is a real life example of the PN70 listed company like it required to deepen the financial also for strategy analysis. And for the third one, which the root cause of the financial the stress. Actually, you want to identify the key financial also for operations issues such as the pro management, the also market price like contribute to the challenge. And for the third one, which the needs for the strategy later on I will go through for that. And the last one, which the managing the community development. Actually, you want to analyze the value of the financial literacy like critical thinking, also for leadership skill like in managing the turnaround. And for second, I'm going to present about the executive summary. Actually, for first part, which the several financial decrease, like when they identify through the financial analysis. Actually, we will focus about the ratio, also for the trade analysis for the TXCD per heart financial statement, like when you show out the critical issues like the renovation, also for the poor liquidity, also for the reaching the deep and so on. And for second point, which the no financial issue deeper the traces. Actually, the leadership instability also will be outdated the business model also because like the effects to change the company financial position. For the third one, which the strategy assessment use the XWOT also with the pastel tools. Actually, this tool is which want to evaluate the internal weakness also for external trends like when to highlight that how is the key area that can improve the company deadline. Actually, for the last one, we should turn around a recommendation for the recovery. And later on, I will discuss more like in a further slide for the next one. Actually, I present about the company overall which and also for the background. Actually, for the first one, which the TSCD per heart actually is the favorite from the agencies per heart. Actually, is the public listed company like to invest in the construction, trading also for the IT solutions. Actually, it's also signal like it's got some financial interest due to varying the shareholder equity, also for net losses, also for reducing the liability. And the second one, which the trigger and also for the implication of the PN70 stated actually is more important from non-correlates with the Bursa Malaysia's financial like threshold. Actually, we also affect the legal standing, investor trust, credit assets, and overall the business operation. And the third one is the response measure also for the strategy challenge. Actually, is one to focus about like is exposing the asset sales, the restriction also for financial to reserve the NP70 stated. However, like is required to address to your like strategy issue, not just only temporary fix. And for last one, which the broader industry content also need for reform. Actually, for this one, I want to present about like if some issues, some the economic stress, also for the financial change due to the technology change.
Here we present the core financial data of TXCD behind from 2022 to 2024. As shown in the table, 2022 has an unusually high revenue of 485.8 million ringgit. However, the company still recovered a massive net loss of 135.5 million ringgit. This was mainly due to the asset impairment and revenue that the editor could not verify, raising serious concern of financial transparency. In 2023, revenue dropped slightly to 29.3 million ringgit. This company reported a sole profit of 1.3 million ringgit, but it was largely from non-operational source rather than core business activities. In 2024, where revenue slightly increased to 40.7 million ringgit, the company again suffered a net loss of 16.5 million ringgit. This chart shows the sharp decline in both revenue and profit over time. We also see that total assets and liquidity shrank significantly, indicating a major contraction in business care. Meanwhile, liability was reduced by over 90%, reflecting a shift to a net debt fair position, but with minimal operating capacity left. Now, let's look at the financial results. The net profit margin was negative in 2022 and 2024, with a brief positive margin in 2023. However, this was not sustainable. Overall, the trend reflects inconsistent and weakly profitability. Return on assets was negative for 2 of the 3 years, suggesting that TXCD has not been using its assets effectively. Even in 2023, when the company reported a small profit, ROA was only 0.7%. On the positive side, the debt-to-equity ratio fell sharply from 0.65 in 2022 to just 1.11 in 2024. This indicates that the company successfully reduced its liabilities. However, it also means that shareholder equity has shrunk, showing the cost of that deleveraging process. Finally, the current ratio remained below 1.0 in both 2022 and 2024. This suggests continued liquidity risk and weak short-term financial health, despite a temporary spike in 2023. In summary, TXCD shows signs of financial distress across key indicators. While debt levels has improved, profitability and liquidity remain serious concerns.
Hello, doctor. My name is Sunmin Xu. Now I'm going to talk about the interpretation of the financial results. About the key financial highlights from 2022 to 2024. The TXCD's revenue dropped it from the 486 million to 40.7 million ringgit, shrinking by over 90%. The net profit remained in the negative range throughout the period, and they only turned positive briefly in 2023 due to one-time gains. During the same period, the return on the assets was also mostly in the negative range, indicating that the company's asset utilization efficiency was extremely low. Although through the scale of the non-core assets and the debt to equality swaps, the total liabilities decreased from the 149 million to the 111 million ringgit, reducing the debt to equality ratio to 0.11. The asset size nearly halved. The shareholders' equity was less than 100 million, significantly weakening the financial flexibility. The current ratio peaked it at 3.35 in 2023 and then dropped it to the 0.92, below the safety sharehold, indicating that the short-term assets could not fully cover the short-term liabilities. Overall, deleveraging reduced the risk of the bankruptcy, the main business loss at adults' reservations, and the information disclosure gaps mean the company is not simply a liquidity crisis, but a dual failure in the profit model and the governance structure. The next part is the governance gaps and the action plan. The core of the predicament lies in the fragile profit model, the loss of the market share, and the weak internal control. To truly break free from the PN17, the management team needs to simultaneously carry out financial and the governance reforms. First, continue to divest the inefficient or high risk assets and introduce strategic investors to replenish working capital. Second, rebuild the internal control and the disclosure process. Strictly follow IFRS for revenue recognition and asset valuation. The restore the capability of the auditing. Third, add independent directors and launch an ERP system to enhance transparency and decision-making efficiency. Fourth, set clear milestones for profit and cash flow restoration, and submit an executable PN17 standardization plan within 12 months. Only by simultaneously achieving profit restoration and governance upgrade can we restore market confidence, reduce financing costs, and ultimately emerge from the shadow of the PN17 and move towards sustainable development.
Hello everyone, my name is Sun Haohao. I will go on to introduce the strategic interpretation and management tool analysis section of TXCD per head. We will analyze the causes of its predicament from the financial and non-financial levels, and further identify its problems and potential transformation directions with the help of SWOT and pastel tools. Firstly, from a financial perspective, TXCD's revenue plummeted by 91% between 2022 and 2024, plummeting from 485.76 million ringgit to 40.73 million ringgit. At the same time, the company suffered loss for two consecutive periods, totaling more than 150 million ringgit, and its assets shrunk significantly. Both ROE and PBT margin were negative, indicating that there were systematic problems in the profit model and the capital structure of the company. At the non-financial level, the company's strategic direction is unstable, shifting from construction to retail without forming a core positioning. Frequent changes in governance structure and frequent turnover of directors exacerbate market uncertainty about its prospects. In addition, although its ESG framework has been proposed, it still lacks practical results to demonstrate, making it difficult to rebuild external trust. Next is the managerial tool application. We use the SWOT and the pastel. First is the SWOT analysis. We further define the company's current strategic positions through SWOT analysis. Its strengths include historical industry experience and resources. The weaknesses are the persistence of loss, the erosion of assets, and the lack of a clear direction. Industry recovery and the government infrastructure investment offer opportunities, but it could also face delisting risks if restructuring fails. Finally, it can be seen from the pastel tool that TXCD is faced with positive factors, such as external economic recovery and policy support, but at the same time, it is also restricted by legal and regulatory pressure, rising environmental protection requirements, and insufficient technical adaptation. Taken together, companies need to act quickly on internal governance, strategy focus, and technology investment.
And actually, when I present about the recommendation for the management, I really focus on three main points. And for the first one, which the financial stabilizations, also for the governance reforms, actually the TSCD perhaps must urgently to reschedule like it deemed, also for the secure of the capital injections, also to dispose of the non-core access to stable the liquidity, also for the you will see. Actually, we want to strengthen for the company governance through the broad discussions like when to raising the you want to increase the risk management system also like that's important to like restore the shareholder trust. And the second, which the strategy alignment with the operational effectiveness. Actually, the company should focus on the core business segment. Actually, we want to implement the cost-cutting measure and also investment in the digital transformation. That's the few things that they want to focus about. And the last point I want to focus about is the customer renewal. Also for the ESG integrations. Actually, when the rebuilding the customer trust to the CRM, like improvement, you want the rebranding and so on, you want to refine the various propositions, like is very important because they will actually is build the sustainability to address the responsible investment. So for the conclusion, actually for the TSCD perhaps like which the PN70 stated, like you want to underscore the needs of the strategy reform across the financial, operational, also for the governance area, and this report actually is outline a very important recovery roadmap to help the company to regain the stability, like to drive the innovation, also to achieve the long-term success. So that's all for our presentation. We have on Group 1, so thank you for watching our video.